I'm Emily Chang, and this is Bloomberg Technology. Coming up, after roaring into 2018 on a winning streak, markets sink to their worst week in 2 years. We'll break down the catalysts driving the declines, including Apple's entry into a bear market. Plus, the cryptocurrency conundrum. Is Bitcoin in bubble territory? We'll track today's highs, lows, anxiety, and panic as prices whipsaw across the board. And opening arguments begin in court Monday as Uber and Waymo go to war. Our take on the talent and trade secrets fight shaking up Silicon Valley. First, to our lead. A massive sell-off in stocks, the major averages in the U.S. sinking in Friday's session, with the Dow falling more than 600 points. Volatility is rushing back into the markets after a record-breaking rally in 2017 into this year. U.S. stocks close out its worst week in 2 years due to rising investor concern about soaring valuations, a slowing economy, and weak corporate earnings. For more, I want to bring in our Bloomberg News stocks reporter, Abigail Doolittle, in New York. So, Abigail, what's happening? What is the force behind today's sell-off?
Emily, it was really an extraordinary day for U.S. stocks. We started lower, sharply lower, down about 1%. And then after fluctuating a little bit, the momentum continued to go to the sellers, finishing significantly lower, as we just saw, at the lows. Some traders and strategists would say it was a very ugly close with U.S. stocks finishing at the lows. The Dow having its worst day since the Brexit back in June of 2016, just to put the sense of risk off into perspective. But interesting, you mentioned how we're having the worst week. We did have the worst week since early January and February of 2016. Interesting about that is the idea that today is just a continuation of what we've been seeing all week. So January for the S&P 500 was the best week since March of 2016. Now we have the worst week since January of 2016. So a really big reversal there. And behind this, of course, we did have overbought conditions through that rally with that best week for the S&P 500 in January, plus rising rates. That's really pressuring stocks, and those weak earnings reports that you're talking about. Relative to the overbought conditions, because everybody sometimes wants to pin a sell-off to a specific reason. Sometimes it's just because stocks have been going up so much, they're due a little bit of consolidation. If we hop into the Bloomberg and we take a look at BTV 5806, this could be what's happening here. This is a 6-month chart of the NASDAQ 100, and up top we see the NASDAQ 100 starting to move down toward its 50-day moving average. Right now, it appears likely to touch down to those levels. That would represent a pullback of greater than 5%, something that we have not seen in a long time for the major averages. A move down to the yellow moving average, the 200-day moving average, that would be a true correction, down more than 10%, Emily. And on the bottom, we have an oscillator that suggests that the NASDAQ 100, big tech and biotech, is in fact coming off of overbought conditions, and that we could see this pullback really continue.
Let's talk about Apple shares closing down 4.3%. Obviously, this is on the back of that earnings report, 77.3 million iPhones when analysts were looking for closer to 80. I spoke to Tim Cook yesterday, and he said he couldn't be prouder of the iPhone X's performance, that it's been the most popular phone every week since it's come out, and obviously the average selling price as a result of iPhones drove higher, but investors still not satisfied.
Well, that's a really interesting point that you make, Emily, because on the one hand, we have the company and these iconic, wonderful products, the iPhone X that Tim Cook is so proud of with that higher selling price, and the average selling price, of course, as you know, did rise for Apple, and that was a plus. But on the other hand, we have the stock and Wall Street expectations, and sometimes there's a disconnect where the street gets a little bit ahead of itself and they bring back estimates. That did happen here around Apple, and it just wasn't quite enough. So we have the disappointment for investors that the growth that they had been looking for not quite achieved, plus the outlook for the March quarter not quite enough. So again, there's sometimes can just be a little bit of a separation between street expectations and what the company performs. And if we take a look at the technicals on Apple, this helps to explain this in a way, because while the company obviously has these great products, the street had bigger expectations. This is BTV 113, a one-year chart relative to Apple's 100-day moving average. The buyers had been in control. On today's today's sell-off in Apple, the sellers are now starting to take control of Apple on a one-year basis. This stock is now confirmed for at least $150, which, to your point, could put it into an official bear market. And there are still sell signals on the bottom of this chart. So it seems like the selling pressure could continue as Wall Street really reconciles the idea that the growth that they were hoping that perhaps Apple would, make the estimates despite the concerns that that was not likely to happen. We also had a sell-off, though, of course, Emily, for Alphabet. Very disappointing quarter there from an earnings standpoint. Traffic acquisition costs rising. That's expected to continue. We had weakness for the chip sector today, too, Emily, and that's interesting only because there wasn't a specific trigger there. That's often considered to be a leading sector, though. So we saw Lam Research, Applied Materials. Those are semi-cap equipment companies, as you know, selling off in a big way. Plus AMD. They reported earlier this week. The quarter was good. The outlook was good, but a little bit messy in terms of accounting changes, plus the idea that perhaps management's being a little bit conservative with the outlook. So you put all of this together with the valuations that you were talking about being very high. Stocks may have been priced to perfection coming into this key earnings week, and a lot of the big tech companies just not delivering the way that investors had hoped.
What are the key drivers you're watching next week, Abigail?
Well, I think from a macro standpoint, we really need to keep an eye on rates because that has been one of the macro pressures on markets. Rates just rising very quickly, perhaps unexpectedly. With those overbought conditions, many strategists on the street were talking about a possible pullback. What would be the trigger? Not a lot of people talking about rising rates, a very traditional, simple cause, and yet that is what has seemed to cause this broader sell-off, the idea that perhaps rising rates could slow the economy or make future earnings streams look less impressive. We will also have, Emily, some other key earnings reports next week. Skyworks, the Apple supplier, Akamai, Gilead Sciences, and Tesla. Relative to Gilead Sciences, the biotech index this week, the NBI, had its worst week since October of 2016, pressured in part by President Donald Trump talking about bringing down drug pricing. Plus, we had that healthcare consortium between Amazon, Berkshire Hathaway, and JP Morgan. It'll be interesting to see whether or not that continues, because that could be a specific pressure for the Nasdaq. But a possible bright spot, Emily, we do have Twitter. Twitter is technically confirmed for a big move higher. And I should mention, of course, Bloomberg does have a breaking news network with Twitter on Twitter, TikTok. And next week, they report earnings. Many analysts are saying it's a low bar quarter, so perhaps they could meet, maybe even beat. Plus, there is, of course, that ongoing buyout speculation, Emily, on Twitter.
All right, Abigail Doolittle covering it all for us in New York. Thanks so much, Abigail, for breaking it all down. Well, in the latest revolving door, Sony will promote Kenichiro Yoshida to CEO after helping to restore earnings and the balance sheet of the Japanese electronics icon. As CFO, investors saw Yoshida bring financial discipline to the electronics giant after years of losses. Outgoing CEO Kazuo Hirai will become Sony chair on April 1st. Coming up, cryptocurrencies keep sliding. Bitcoin and its increasing horde of rivals continue 2018 in the red. Why there's only more concerns ahead for the industry next. And Bloomberg Technology is live streaming on Twitter. Check us out at Technology weekdays, 5 p.m. in New York, 2 p.m. in San Francisco. This is Bloomberg. UBS could require employees to get approval before trading cryptocurrencies in their personal accounts. The bank confirmed it is considering additional rules and requirements for its own staff. Chairman Axel Weber has warned of a, quote, massive drop in Bitcoin's value and does not trade or offer it to retail clients. And staying with Bitcoin, the digital currency hit a low for the year since setting an all-time high of more than $19,000 on December 18th. The cryptocurrency has fallen by as much as 60%. Bitcoin has been hit by expectations of more government oversight, fears of price manipulation, lingering concern that it's just another asset bubble. Joining us now from New York, Jalak Jobanputra, founder and managing partner of Future Perfect Ventures, an early-stage venture capital fund focusing on big data and blockchain. Also with us, our Bloomberg editor-at-large, Corey Johnson. So, Corey, first first of all, just walk us through the moves of the last week and put it into context for this sell-off that's been happening over the last month.
Yeah, there's been an enormous volatility sort of in the history of cryptocurrency trading, so brief that it is. And the introduction of options trading did not reduce that volatility. And I think what we've also seen is that all of these currencies are being sort of tied in together as if they're all the same. Those that have actual functional use cases and those that are merely a store of value. Well, the store was open and there wasn't much value for a good part of today. There's a dramatic sell-off really in the last couple of days, and then a really big bounce off the bottom. If you bought Ethereum this morning at 8 o'clock in the morning in New York and closed out of your position by the end of the day, you're up about 30%. So fantastic moves today and a bounce back. When I'm looking at the VCCY function on the Bloomberg terminal, you can see that some of the biggest currencies, for the day, Bitcoin down 5%, Ripple actually up 0.5% for the day, Ethereum down 0.7% for the day, Litecoin down up 0.2% for the day. So tremendous volatility around the trading of these things. I think it'll really start to be interesting when they start trading in different directions because the different cryptocurrencies certainly have different prospects.
Jalak, is all of this making you do anything differently at Future Perfect Ventures?
Not really. Those of us that have been in the space for a while, we're used to volatility. We expected a downturn to happen. We had seen the prices go up so quickly at the end of last year. I mean, the last time Bitcoin was at this price, where it is right now, was only in November, early November. So if you kind of zoom out of the graphs, you certainly can see that we've still had quite a bit of run up in the prices, and there have been some regulatory actions over the past week. There was a large hack that happened in Japan a week ago to the sum of $500 million stolen from an exchange. So we're definitely going to see more of a regulatory crackdown, and that spooked some of the newer investors in the market.
Corey, walk us through next week. What are we expecting? What moves are we watching?
Well, I mean, I think the volatility is something that's not going to go away this week, next week, or even a year from now. Again, one would have thought that the options trading would have helped reduce that because it would have helped people take longer notions. But the volatility has been so extreme that the longer-term contracts also are pricing in so much volatility with an inability to sort of see what those prices are going to be. And it might be that way for quite a long time. I think really once the use cases start to get a little more clear and once a lot of the partnerships that real businesses are putting together start to put the currencies to use, they start being used in payments, they start being used in money transfer, then we're really going to see what things have value that is more than speculative but actual functional value. And that's not going to change next week. In fact, it probably won't change for the next few years. But over the long term, that's sort of those are the kinds of developments that will have to take place for this to be anything but funny money.
Jalak, how closely are you watching regulation? Obviously, we've been following what's been going on in Japan and CoinCheck, and now we know that authorities have raided CoinCheck's offices after that robbery. How much of a concern is this?
Well, it's a huge concern. We've had a lot of bad actors in the market because it's been an unregulated market for quite some time. And this reminds me of what happened in the late 90s, except to a bigger extreme with the .com boom. People see a run-up in prices, they want to get in on the action, and then the exchanges allow them to do that, allow the retail investors to get in. So I think this is all good news for the market for the longer term. We need to weed out the bad actors, and we need to make sure the securities or the exchanges have better security provisions in place. And that was a challenge with CoinChecks. They were actually under conversations with the regulators in Japan when the hack happened to shore up their security provisions on the exchange.
What kind of regulation would you like to see?
Well, that's a great question. I don't think we should look at too much regulation in the market because we don't want to stifle innovation. However, we need to make sure that investors are protected from coin offerings that are making false claims, that some of these coin offerings that have gotten crackdowns from the SEC recently had very little little that they were offering in terms of white papers and technology, and yet they were still able to follow through with their coin offerings. So I think it's a good idea for regulators to stay on top of the folks that are just using this as a way to raise money. However, as Corey mentioned, there's a lot of great underlying technology that's being built in the blockchain sector, and we certainly don't want to over-regulate so that goes away.
Corey, when will we start seeing the fruits of that blockchain technological innovation that everybody keeps saying is going to be so transformative, but so much of the focus is still on the price of Bitcoin?
Well, yeah, I mean, first, I think as journalists, it's incumbent upon Emily, you and I, and everybody else in the world of journalism to really think more about this than just a juggling and jiggling stock price or price and a funny graphic with a chart. I mean, there's a lot of really interesting things happening technologically. And I think once you start to focus on what the companies are trying to do, then you can say, yeah, that sounds stupid. That's not a real business. And wow, that's an interesting solution to a problem. But Jalak and I were talking before we went on, and I think one of the sort of difficult things for us as journalists and for investors and so on is that we're talking about money here. And we're talking about a transfer of wealth. And businesses that are involved in managing money and in transferring money and moving money are very hesitant to say how they do it, when they do it, and that they're trying something new. Because if it gets screwed up, they're going to get blamed for it, and they're worried about the appearance of risk. The reason that banks have giant Corinthian columns in front of them isn't because they were built by the Greeks, but they wanted to convince depositors that their money was as safe as history is certain. So I think that discussing current technological changes is something that's really difficult for banks and financial institutions to do, even as they're undertaking tremendous technological change. And for that reason, I think it's going to be really hard to see when Bitcoin's being put to use, when Ethereum is being used for trades, when Ripple and Litecoin are doing the kind of incredible things that they promise, because their customers aren't going to tell us.
All right, Corey Johnson, our editor-at-large, thanks so much, along with Jalak Jobanputra, founder and managing partner of Future Perfect Ventures. Thank you both. Coming up, mobile game HQ Trivia has turned into an overnight sensation, and now more investors want in on the fun. Who could be backing the game show next? This is Bloomberg. Mobile trivia game show app HQ Trivia has stolen the hearts of millions of players and has been backed by big names like Lightspeed Venture Partners. Now, Peter Thiel's Founders Fund wants in on the game. According to Recode, HQ Trivia is raising money in a new round of financing, valuing the company north of $100 million. The $15 million funding round is supposed to be led by Founders Fund partner Cyan Bannister. Joining us now, Bloomberg Businessweek's Max Chafkin, who recently got an inside look at the trivia phenomenon. So, Max, perhaps not a surprise that more VCs want in. What do you make of it?
Yeah, this was the number that was being bandied about at the end of December. It's a pretty impressive valuation considering the company is very young and it doesn't have very many employees. I think something like 30 employees, but it's hot. It's they're from I think the last time we spoke about Trivia HQ 3 or 4 weeks ago, they were doing on a good day like 700,000 concurrent viewers, and now it's up over 1.5 million. So definitely a lot of growth. I mean, and that's something that VCs like. And it appears that whatever scandals or what have you that had been sort of dogging the company were not enough to stop them from raising this funding round.
Remind us of those scandals. This has to do with bad behavior of one of the founders. What happened? Yeah,
there were allegations that came up in a Recode report at the end of last year of quote-unquote creepy behavior. Jeremy Liu, the partner from Lightspeed who had done the deal, kind of came out and said he had done an investigation. Nothing to see here. The company denied it. But as we learned today, there were sort of behind-the-scenes investors were kind of poking and prodding at the company. I think for me, the takeaway here is that Silicon Valley, if you want to look at it as sort of making progress on gender issues, I mean, the fact that HQ was subjected to scrutiny at this stage feels like something slightly new. Now, in the end, they were able to do the deal, so I think that's causing some sort of outrage in some corners on Twitter. On the other hand, it does, to my eye anyway, feel like a bit of progress.
What is it that investors are so optimistic about when it comes to the future of this company? Okay, behavior aside, what is the potential behind this idea?
So the thing that is exciting from the point of view of investors is the fact that these are concurrent viewers. So if 1.5 million may not sound like a huge number, but the thing you have to remember is normally when you see, a YouTube video that's been viewed, say, 100 million times, that's coming over the course of weeks, months, or even years. Concurrent viewers are much better for advertising because advertisers can sort of reach a set audience at a set time, and that's the kind of closest thing to television advertising where the high rates are. So this is maybe the first time we've seen something that really looks like a legitimate threat to the kind of television advertising that makes the big bucks, and that's what's enticing.
So, where is this going? I mean, what are the potential future avenues of business here?
So they told me, back when I spoke to them at the end of last year, that the CEO Russ Yusupov told me that basically they see themselves creating additional shows. They want to have like an entire kind of 24/7 television network that is going to have lots of interactive components. Now he's very vague there, but the idea is to build on what they have now.
And beyond. Okay, Bloomberg Business Week's Max Chafkin, as always, thank you so much for stopping by. Coming up, Waymo versus Uber. The jury's been chosen and the trial begins Monday. We will look at that, as well as the week that was next. This is Bloomberg. This is Bloomberg Technology. I'm Emily Chang. The big story today was the massive sell-off in U.S. stocks. The Dow turning in its worst performance since June of 2016. And it was another wild week for the crypto market. Bitcoin at one point sinking past $8,000 to its lowest level so far this year. Meantime, Nouriel Roubini says today's fall in the value of Bitcoin is the latest proof that the cryptocurrency is the biggest bubble in history. The NYU economics professor correctly predicted the 2008 financial crisis, but his calls on oil and the S&P 500 the next year were wrong, among others. Roubini spoke with Bloomberg's Tom Keene earlier today.
I said it's the mother of all bubbles, and it's also the biggest bubble in human history. If you compare it to, say, the Mississippi bubble or the tech bubble or tulip mania or South Sea bubble.
You can equate Bitcoin to tulips.
Much worse. If you look at the peak in Bitcoin was an order of magnitude higher than tulip mania, and now has crashed by about 60% compared to the peak of mid-December. Has crashed 30% the last week and 10% today, and it's all the way down to zero. The fundamental value of Bitcoin is zero.
I was talking with our Edward Robinson and our team at Crypto, folks out on Twitter. How did they get this handle? At Crypto out on Twitter is a Bloomberg summation of this culture and event. The money question today, Nouriel, is the crypto people say they can separate the crypto industry, blockchain, all the rest of it, everything we saw at Davos, from the value of Bitcoin. Can you separate crypto from the price decay of Bitcoin?
No. First of all, there are already something like 1,300 plus cryptocurrencies or ICOs. Most of them are even worse and don't have any intrinsic value, like Bitcoin. So if Bitcoin is a bubble, they're a bubble to the power of 2 or 3. And there is all this hype about blockchain saying, okay, maybe Bitcoin and cryptocurrencies are a bubble or a fad, but blockchain is really a revolutionary industry. It's been around for 10 years. The only application is Bitcoin or cryptocurrencies that are a scam. And in the early days of the internet, people say, well, in the early days, you had HTML, you have web, you have email, you had lots of other things. You had millions of applications and hundreds of millions using them. After 10 years, what they can offer in the blockchain space, nothing. Just a bunch of cryptocurrencies that are a scam.
That was Bloomberg's Tom Keene speaking with Nouriel Roubini, chairman of Roubini Macro Associates. From Facebook to Amazon to Apple and more, it was a plethora of tech earnings this week. To discuss that and the much anticipated Waymo versus Uber trial, I sat down earlier with two members of our Bloomberg Tech team, executive editor Tom Giles and editor Alistair Barr. We talked about Apple's surprising iPhone sales.
So there's positive and negative in the numbers. You want to look at the positive first, which is what Tim was looking at. A couple things come to mind. One, average selling prices, very closely watched metric. They went up considerably, and that's an indication that when people bought the iPhone, they gravitated toward the higher end, the iPhone X, right? This $1,000, starts at $1,000. The other thing Apple is really starting to get you to think about is that installed base of users. 1.3 billion people are on the iPhone, and that's a group of people that we can sell apps, services, entertainment, all kinds of things to. And they're getting away from this idea of the net increase in the number of iPhones sold, and that brings us to the negative side for Apple.
The bear case here.
That's right. They sold fewer iPhones than analysts had been expecting them to, and analysts had even brought those numbers down further. This whole idea of the iPhone X creating a super cycle. Ali loves to talk about super cycle. In fact, he wrote a story about it today. This idea that this was going to create a wave of buying, a mass purchases of iPhones, a bunch of upgrades, that is really receding from the conversation because it's a very big installed base already, and you can't move that ship very much in any given quarter.
So, Ali, would you say this was not a super cycle or has not been a super cycle?
Somebody pointed out earlier today that there's really only been one super cycle, which was when the iPhones got really big and everyone upgraded then. But this one was pronounced dead by quite a few analysts this morning, which is a real contrast to a couple of months ago when excitement was really high.
Okay, so we're going to continue to monitor Apple. Let's talk about Facebook, though. And the key metric there is that for the first time ever, the number of users declined in the United States. So, you know, look, this has been the biggest market for a long time, but we're obviously hitting saturation point.
That's right. Mark Zuckerberg's got a lot on his hands. He's got a plan to fix it. Just based on the traditional metrics that you measure Facebook on, which is the amount of time spent and how engaged people are, those metrics basically, he said, are going to go away. So investors don't really know how to measure things going forward. The one positive that came out of the conference call was the CFO basically said the advertising dollars are going to keep rolling no matter what happens, and the stock hit a record the day after.
Importantly, though, the changes that they're making, which is sharing more family and friends versus news, are actually decreasing engagement, and Facebook says it's doing this for the good of the user base and because of its sort of moral obligation and responsibility, but it's not ultimately going to lead to more time spent.
That time spent came down actually in the fourth quarter, and they want, in the long term, they say it's going to be good. It's going to be, your interaction is going to be more meaningful. Your experience on Facebook is more meaningful. But in the short term, there are a lot of changes. They're putting people off. They're going, this isn't the Facebook that I remember, and some of those videos that I sort of clicked on before, I'm not seeing them, and so that's not keeping me there the way it used to before.
All right, let's talk about Amazon. Anything bad to report here, or is it just all smiles?
It's if you're Jeff Bezos, you're really smiling right now. It's really hard to find the bear case for Amazon. I mean, you've got to watch their spending, and they do spend a lot, but what's happening is all of this investment that Jeff Bezos and his company have been making for years and years is really starting to pay off. We saw it big time in the fourth quarter. One, just the basic e-commerce. We're buying stuff for Christmas. That was gangbusters, as it often is. Also, we're seeing payoff in terms of their Amazon Web Services business. Once again, this thing that they created in-house many years ago just for their own, their own cloud computing business, they've started to sell that outside, and it's really taken off. So they saw more and more results of that in the fourth quarter. Looking forward, there's all kinds of new businesses that Jeff Bezos is getting into, right? They bought Whole Foods, so we're going to see more and more as they bring technology into Whole Foods stores. And then secondly, just this week, we saw them announcing this healthcare initiative with Berkshire Hathaway, JP Morgan Chase. This is them. We're gonna create a new healthcare paradigm for our millions of employees and their families. And you can see them taking that on the road and opening that to the masses later.
And Jeff Bezos saying he's doubling down on Alexa, and he's making his first star turn in a Super Bowl commercial, which we're all expecting.
We'll see it Sunday.
This Sunday. Before we go, I want to quickly touch on Waymo versus Uber. The jury selection has happened. The trial has begun. What happened this week?
So Waymo really wanted a sort of regular type jury with regular people on it, because their argument's going to be this guy, Anthony Lewandowski, he left, he stole our stuff, and he's not very nice. And Uber basically wants a technical jury because they're going to say, well, he took some of the stuff with him, we didn't get it, and even the stuff that he took is not the same as what we're developing.
That was the Week in Tech with Bloomberg Tech's Tom Giles and Alistair Barr. You can read all about the Uber Waymo case on our new vertical. It is called Hyperdrive, and it is dedicated to its dedicated webpage on Bloomberg.com. Will feature our best reporting on the future of transport from teams across the Bloomberg News universe. You can find it at Bloomberg.com/hyperdrive. Well, YouTube is taking steps to increase transparency when it comes to political content. Starting on Friday, it will begin placing notices below videos uploaded by government-funded news publishers. The notice will include information on how the publisher is funded and a link to its Wikipedia page. This comes as social media companies face increased scrutiny over their efforts to disclose the identities of online advertisers. Coming up, Michael Dell's continued push to bring his tech empire under one umbrella. We'll bring you all the latest on whether Dell is going public or not. That's next. This is Bloomberg. The on-again, off-again talks between Vodafone and Liberty Global appear to be on again. Mobile provider Vodafone is looking to acquire Liberty Global assets in continental Europe and not the UK, where both companies are based. Vodafone said it wants to buy assets where the two overlap, meaning Germany, the Czech Republic, Hungary, and Romania. Discussions are said to be in an early stage with no assurance that the deal would go through. Now to a story we've been following. Dell Technologies saying it is still weighing its options, including a potential IPO or a business combination with VMware. But it's not considering a sale to a third party. Joining me now to discuss, Bloomberg Deals reporter Alex Barinka. So what is happening as far as we know?
So this morning, the company actually came out and confirmed what we reported first last week, that they're considering some kind of move to get Dell public again after it was taken private back in 2013. They did come out, and that last bit is important. They specifically said there's no other company involved. So basically that means Michael Dell's empire, whether it's Dell, the EMC asset that they bought a few years ago, or VMware, which he has the controlling stake in, that's who we're talking about right now as it considers its options, which could be do nothing at this point. So why is this important? Well, Dell has been kind of trying to get all of these things under one roof and simplify it. You have these three companies, you have that tracking stock that they put out into the wild a few years back to help finance the EMC deal. Again, my sources have told me they might look to put all of these together. And frankly, it's been an interesting reaction from the street since we broke this news last week. Some people don't see why a reverse merger with VMware makes sense. Kirk Materne, an analyst over at Evercore, thinks that it'll be something in the middle where Dell does some kind of interaction with VMware, maybe it takes some of its other assets public. But right now, it seems like the cards are on the table and being discussed at the board level for Dell.
That said, what is the most likely scenario here?
Right now, it does seem like the intention is to simplify this. So the most likely scenario, according to the folks I'm talking to, is one where Dell and VMware are under one roof. So that's the reverse merger option, where VMware uses its common stock to acquire Dell and get Dell public. But there are some hiccups there. You have to remember, Michael Dell himself and the Dell company has a 97.7% voting rights in VMware. There are potentially some kind of fairness and legal issues for the minority shareholders if, you know, the guy who votes for this company is buying his own company. You could see there could be some contention
there. There's quite some elaborate financial engineering going on here. Do we think Michael Dell had this plan all along?
From what I have heard, this was not the plan from the beginning. But whether it's Dell or Silver Lake, who has been in with him this whole ride, they are very savvy. When you think back to the EMC deal, when EMC was bought for $67 billion, they needed a lot of money to finance that. That's where that tracking stock came from. They reached back to something that was big in 2000 and revived it to kind of raise money to have this stock out there that trades based on the valuation of VMware. So creativity has been in the playbook for them, and getting all of these things under one roof will probably require a creative solution valuation with some very convincing rationale, unless, of course, they go the IPO route, the traditional IPO route for Dell, and then there'd be some more maneuvering down the road to get these all under one umbrella. What I can tell you is we'll be on top of it and try to get the next steps first.
I know you will be. What is the timeline?
The timeline right now still seems to be like we're at early days. They came out today and said they're still considering their alternatives. So, you know, for us, it's important because it has elevated to the board level. So these are real decisions that they're making. But in terms of exactly when, there has been no date set on this. There's no kind of end finish line that they're looking to set here to our knowledge. So to me, that says it's still early days and they're still working through these different options.
Okay, Alex Barinka, our deals reporter, on it as always. Thanks so much, Alex. Coming up, CTE has become a high-profile health crisis in the U.S. over the last few years. We look at the latest science and technology behind the fight to diagnose and treat the disease next. This is Bloomberg. Russian cosmonauts embarked on a spacewalk to upgrade an antenna at the International Space Station. They're replacing an old electronics box for the main antenna on the Russian side of the space station, and it is the second spacewalk in as many weeks. On January 23rd, 2 U.S. astronauts installed a new hand on the station's robotic arm. With the Super Bowl this weekend, pro football remains in the midst of a health crisis. The NFL reported a 16% increase in the incidence of concussions this last season. Repetitive brain trauma puts players at risk of a serious degenerative disease. Bloomberg's Ann Mostu reports on how researchers and businesses are racing to reduce that risk before it's too late.
CTE is often found in the brains of deceased athletes, military veterans, and others with a history of repetitive brain trauma. Hundreds have donated their brains to the VA Boston University Concussion Legacy Foundation Brain Bank.
This is a former NFL player who died in his early 70s, and this is a veteran who also died in his early 70s.
Dr. Ann McKee dissects these brains.
The hippocampus and the mammillary bodies are very important for memory. I can see that they're slightly affected.
McKee recently dissected the brain of former New England Patriots player Aaron Hernandez, who was convicted of murder and later committed suicide.
You'll see right away that the brain is showing signs of shrinkage. You can see the crevices in the brain that you can't see in the normal.
McKee says Hernandez's severe case of CTE impacted his decision-making, depression, and ability to control rage and aggression. Right now, she thinks we're underestimating how many people have CTE.
We were able to distinguish between CTE and controls and CTE and Alzheimer's disease. The next question is, can we do this in the blood and can we do this in living people? And we aren't there yet with those answers.
But the need for a diagnosis in the living is motivating companies such as Quanterix in Lexington, Massachusetts, to work faster on technology that could diagnose concussions and CTE in as few as 30 minutes. Kevin Rosovsky is the CEO.
It's like a high-powered microscope. And so by doing that, we can see little biomarkers that you couldn't see before in the blood.
Quanterix received a grant from the NFL and just went public. Since then, its stock is up more than 40%. The company sells a machine called Simoa for $175,000 to other biotechs, hospitals, and researchers.
And for the first time in history, we're able to see brain health in blood, and that's a major breakthrough, and that's leading to less invasive testing, and we've already been able to see evidence of concussions, and there's the beginning evidence of being able to see the accumulated effect of concussions.
Quanterix is also trying to detect Alzheimer's disease, multiple sclerosis, and ALS. Rosovsky says he thinks diagnosing concussions will be easier than diagnosing CTE.
Diagnosing CT in the living probably is a couple years away. We're real excited to see the progress, but reducing some of that work into actual tests in a laboratory takes time. There's regulatory approvals. There's a lot of red tape that you have to go through.
Also in this race to diagnose CTE in the blood are Athlon Medical and Exosome Sciences. And New York's Mount Sinai Hospital is scanning for the disease in the living, but it's just one step in a series of questions for those with serious head trauma. There's still no cure for CTE.
Even if we had a great idea for a treatment, there's no way to test whether it's effective or not. So that's the enormous advance that we'll get if we can develop a biomarker for this disease.
In Boston, Ann Mostu, Bloomberg News.
That does it for this edition of Bloomberg Technology. Reminder, we're live streaming on Twitter. Check us out at Technology, weekdays 5 p.m. in New York, 2 p.m. in San Francisco. That is all for now. This is Bloomberg.